This is Alex from IndieBio. I'm here with three amazing founders and companies focused on next generation materials that are reducing or eliminating carbon from our built environment. And to kick things off, I'm going to have each person on the panel give a quick introduction about themselves. So maybe let's start with Miranda and go to Lily and end with Joe there.
Hi, everyone. My name is Miranda Wang. I'm the co-founder and CEO of Novaloop.
I'm Lily Wachter. I'm the Chief Financial Officer of BioMason.
Hello, I'm Joe Litvak, CEO of Lindgren.
Okay. All right, everyone. I want to start things off on actually the business and market side of the world for you all. All three companies in the last 12 months roughly have had pretty big announcements when it comes to both funding and partnerships. And I noticed in the announcements and talking to you that a pretty significant amount of your kind of traction has actually been outside of the US, in Europe for a couple of you especially. Could you talk a little bit about right now where you're seeing the markets you're having the most success in, and maybe talk a little bit about pull from international markets versus operating in kind of the larger and closer US market where you all are based?
Sure. I mean, I'm happy to jump in on that one. So BioMason definitely has established a strong presence in Europe, particularly in Scandinavia, in Denmark, where we have a subsidiary. We're definitely seeing a strong pull there in terms of the willingness for companies to kind of look past risk aversion in the construction industry to look at, innovative ways to reduce the carbon footprint. I would say there's definitely more of that focus on, low carbon footprint in the supply chain there versus here. I would say in the US, there's just still a really strong risk aversion. And so, we are both, seeing customers like H&M, for example, is a group that we work with. And they have, specific supply chain criteria that incorporate low carbon. You see that a little bit in the US, but definitely more in Europe. And then in terms of manufacturing partners as well, our first manufacturing partner is in Denmark. It's a large precast concrete producer, and they definitely are willing to kind of be on the forefront of innovation and look at an entirely new way, to make a concrete product with biocement. And so, like in our case, we're using biotechnology to make cement. And in traditional cement, you would pull apart carbon and calcium from limestone, or you pull apart the calcium from the carbonate, but then the carbon becomes carbon dioxide in the atmosphere. In our case, that carbon actually stays in the product, but it's a very different and very unique approach. And so I would say, whereas in the US, you're seeing companies look more toward, well, what could we do with carbon capture and storage? It allows us to maintain our traditional process and layers and thing on. In Europe, there's definitely a greater willingness to take that risk of how can we do something entirely different.
Yeah, I actually just want to second what Lily was talking about here, because I think it's very similar for Novaloop. Novaloop, we're developing chemical upcycling for hard to recycle plastics. So what that means is we take plastics that are ubiquitous but really hard to recycle. So think your everyday packaging materials, for example, shipping packaging waste, and we transform that on a molecular level to high performance materials. And so I also see a lot of the things that Lily is saying, namely the risk aversion in the US, specifically around wanting to preserve a lot of the established, traditional ways of doing things, the infrastructure around it. Even in our space, we see that in pyrolysis, for example. Pyrolysis is a technology that's been around since World War II or even before that, where plastic is transformed into fossil fuels. And that type of approach allows a lot of the steam crackers, for example, to still be kept in use. And so that's the predominant strategy that big oil in the US has adopted as their strategies, their North Star. Meanwhile, you just look at, Covestro, for example, in Germany, their approach is not so simply pyrolysis. They see, chemical recycling as a whole as a more colorful, spectrum. So And this is just like an example of how I think the perspectives are a little bit different. In Novaloop's case, we are seeing investor demand from Korea, specifically from a company called Hanwha, which is a leader in solar product production, and also from Scandinavia, over in Finland, through Fortum. So, and they're a Finnish state-owned waste recycling and energy company, and they do a lot of waste to energy today. So they're naturally in a position to look at how to do that sustainably. I see a lot of the similar patterns with Lilly.
Yeah, to add on to that, we're seeing definitely strong pull in Europe, particularly in Germany, where they're in the construction end of things. They're very much on the forefront of adopting new alternative inputs and classes of materials. Lingrove makes high performance, decarbonizing materials and products for the built environment and transportation. We're using rapidly renewable inputs and so 99% bio-based inputs to achieve companies' SDGs. And from our perspective, clearly on the built environment side, Europe and even Asia is way ahead of North America. On the transportation side, it's a little bit less clear. The U.S., of course, is the genesis for electrification of cars, and so we do see stronger pull, perhaps than Europe on the e-mobility end of the spectrum, where they want the interiors to match the propulsion system and kind of ideology. We're also seeing strong pull transportation wise from Asia.
You all hit on kind of the much faster adoption happening elsewhere, and I'm wondering what needs to change actually in the U.S. maybe for this market to be a bit more competitive and more open to your companies to be able to scale and bring product to market. A lot of people right now, at least in the venture world, are talking about the recent climate legislation and kind of the influx of funding and tax credits. Do you look at that as maybe a key lever, or is it maybe something more around the openness to capex that is in Europe and Asia, or what would be some of your thoughts around why it's not happening here, and maybe what could change that?
So our general approach is to lead with kind of product design and first principles from the consumer perspective. American consumers, typically jump in when it's no compromise and only upside. And so we do have the Tesla model as one model to be kind of following in that front. And so this is a country where the consumer leads. So that's really how we're positioning our product, is kind of, you don't have to pay more, but you get higher performance, let's say carbon fiber like performance. And that seems to be working on the kind of specifier side for us, so architects and interior designers. The legislation is not going to hurt, but it's pretty far upstream from where we sit. So no expectation on the government handout from the Lingrove side anytime soon, and even kind of knock-on effects. So that's sort of how we're looking at approaching the market in the U.S. So not expecting much change. I will add, it doesn't help that climate is politicized. So being based, in our case, being based in California is very strategic, in that we do see our market fundamentally starting here and shifting eastward. One specific example is here in California, we have Prop 65, which is basically a clean chemistry related proposition. Anything that's not clean comes with a cancer warning. That doesn't exist elsewhere in the U.S. And so that's one thing we leverage. We have clean chemistry versus incumbent materials, but that's really only relevant in California.
Mm-hmm. Yeah, I mean, for us, I would say we have really ramped up our engagement with the federal government this year, and I think there is some good opportunity because we are seeing much greater focus on industrial decarbonization coming out of some of the recent legislation. Like the Inflation Reduction Act has, some good money for the Department of Energy and for some other, different agencies, even down to the General Services Administration, which owns all of the federal real estate. There's a push there for low embodied carbon. And so I think there are some interesting opportunities, even with the new Office of Clean Energy demonstrations in the Department of Energy. It's called Clean Energy, but there's some opportunity there on the industrial side as well. So I think that what we've realized is it's important for us to engage with those government programs as a way to bridge the gap between the higher risk aversion and getting, into kind of commercial scale and overcoming those hurdles. Whereas I think the last couple of years, we had focused more on just going out and getting commercial partners in the market. And we had a lot of success there in Europe, but less so here. So now it's a bit of a reset and how do we engage more with the government?
I think that's one of the challenges of doing business here in the U.S., especially as an innovator, as a company developing a new technology. Your cost to do business in terms of how much you got to invest to help the government understand what you do, how maybe your category is differentiated or new, and to be part of this umbrella policy that they're creating. It's really expensive. And that's what Novaloop is seeing, for example, is that, we don't find ourselves fitting into any of the pre-existing buckets. For example, we don't consider ourselves the same as a chemical recycler because we're not making fossil fuel products, and that's how people are understanding it today. We're not a carbon sequestration type material. So the recent bill that's been passed sort of just, we sort of in a way fell through the cracks. We're not exactly in the major areas of definition. And it's really costly to hire firms to go and lobby and educate policymakers in this country. And I think you're asking the question of like, why is it so hard in the U.S. or why is it more, overseas and not so much here? I think there's an overabundance of technology. That's the answer. We have more innovation here in the U.S. than really anywhere else. Maybe China has a lot, but China is quite closed off to itself. In the U.S., I think the challenge is for innovators is really working in a way such that you're standing out, and politically what is supported changes, every couple of years. And I mean, right now what we're seeing is batteries and EV that's expanding. That has been a consistent trend. And now we're seeing things for carbon capture. But as a whole, I see that what is supported is not always consistent. I think it's growing in a general trend. And that's really what makes things quite difficult. I think there's not enough support in general for innovations and not enough kind of understanding. So that's a big barrier, I think, if anyone could break down and make more accessible for, smaller startups in an early stage, it would have a big impact in accelerating U.S. adoption of innovation.
Interesting. That's a new take on it. I want to stay kind of on the market side of things for a little bit longer here and ask a little bit about kind of the key drivers and metrics as a company. I think there's a lot to be said around companies kind of touting their carbon footprint and other benefits versus, the fact that you're in the built environment, in the material environment. There's very, very specific technical specs and performance that people expect of any product in any company, if it's a drop-in or a new product. So could you maybe talk a little bit about how you as a company think about all these different metrics and maybe how you see that reflect in the priorities of your customers and partners that you're engaging with?
Yeah, I mean, our cement's going into concrete. We have to meet the relevant specs for the products that we're making, right? And so there is a very strong performance component, things like compressive strength, flexural strength, durability, being able to pass freeze thaw, like it has to be done. One of the challenges actually is that As you get into different parts of the concrete industry, it can be based on material specifications versus performance specifications. So in some cases, if you just meet the performance specification, that's fine, your product can be adopted. But in other cases, if it doesn't have specific chemical properties, regardless of whether it meets the performance specification, you can still have challenges with adoption. And so that's, something, I guess, building on Miranda's point, that does need to change. It's one thing to have, some general legislation that can help, but then when you get into all of the specific rules and how things are implemented, that's a whole other, can of worms, right? But yeah, so for us, there are these, performance metrics we have to meet, but then, life cycle assessment is also very important, the carbon footprint. And for us, and I don't know if this is across the board, for other industries, but for us, it's really cradle to gate versus cradle to grave. So it's the raw materials and the manufacturing process primarily, because in the concrete products industry, you have environmental product declarations, the EPDs, and it's done on a cradle to gate basis. So that's what everybody's looking at from a comparative basis. But again, it's not always taking into account the full picture. For example, if you're able to meet a performance specification with a thinner material, you have to be looking at the difference between, say, mass or volume when trying to compare across, different EPDs. So there is a lot of complexity in the metrics. We actually just joined a new initiative run out of NIST that is looking at metrics for both carbon and performance for low carbon cements and concretes. So we're excited about that because there's a good mix of, academia and companies and others involved.
I often, think about product market fit as this kind of mantra for early stage companies. And for folks that are making actual products, doing manufacturing, making materials, it seems like it should be more like, product specification and market fit, because there's really, until you meet the specification, it's really just an idea. And as obvious as that is, that's the years of work in many cases. It certainly has been for Lingrove. So our approach has been where we can have the greatest gross margin, and then also not deal with regulatory constraints and hurdles that would require long-term lobbying. On the other hand, because we're doing a natural fiber composite, that's a new space for construction, and doesn't have the norms already existent. So that's led Lingrove to really be focusing on surfaces and selling by the area, not by the pound or kilo, and competing against applications where customers are already willing to pay a premium for things like wood and laminate and high-end, let's say paneling. So really the emphasis is, where can we move fast and gain a high margin and not be stuck in years of difficulty meeting specification, but rather have that teed up for the future once we get through these kind of higher end, more immediate applications of interiors.
I would agree with that. I think, playing the material space, especially if you're dealing with a material where anyone cares about how it performs. There are some materials, maybe like fillers, people don't really care about how it performs. You can't use very much of it either. But in a lot of materials, most materials, your customer will care about how does it perform, how much of my current thing can I replace with yours, and also how well does your material process and equipment I already have or my manufacturers already have. And And meeting those specs is the basic threshold for being on the table as a viable supply alternative. And in addition to that, what customers are looking for is on a carbon footprint level, you really do need to be lower in carbon emissions, or in some cases, maybe carbon negative. A lot of the filler products, they're carbon negative. So you use them, your carbon footprint comes down. Those are, basics, but, you're also thinking about other things that a life cycle assessment looks at, like water usage. And a lot of the times water is not talked about enough, honestly, in the current environment of things. Pesticide usage, we're, looking at things like biodiversity. These actually are all different aspects that life cycle assessments look for, but they're not actually a lot of the times. Some of the technologies out there, at least they're not publishing it, they may not even necessarily be scoring very well on that. And I think it's really important for us not just look only at carbon, but to look at water, because there's not enough water on this planet for a lot of things that we're planning on doing. I think, the challenge with being a materials company is, for example, Novaloop, we're making performance plastics as our first products, right? It's a thermoplastic polyurethane, or TPU. That material has been in commercial development and scale up since the past 50 years. At least the fossil fuel version of it has been, right? So it's been perfected in a way. There's everything you want in a TPU is already achieved by the fossil fuel industry. That's why there's not a whole lot of innovation in it, because they've already gotten where they want to be. And so for a materials company that's making a better version of that, you've got to catch up on so many years of innovation. Customers want the material to look a certain way, to feel a certain way, to process in a certain way. They have these metrics they're used to. And that's the delicate conversation to have with the customer, right? Is you want sustainability, but what are you willing to give for it? And oftentimes, I think as a producer or, an emerging manufacturer, you have to really pick up the slack here to close this gap. And it is really, really challenging.
Yeah. So I'm going to shift gear a little bit. Speaking of kind of valuing, I think, this innovation and the challenges that come in the material world, we have a lot of investors, institutional, angel, and others who are signed up and probably watching this talk. What would you tell VCs that they need to understand in order to work and successfully invest in next generation materials?
We call our ECOA platform more product driven, and rather than a material per se. And I think that's, looking at materials and scaling up materials is a long-term prospect. There are these challenges that we've all been speaking to in this conversation, as far as time and investment and adoption, specification. So jumping to a product means that we need consumer engagement, and having, in our specific case, in Lingro's case, having the VCs understand that there is scalable opportunities when you consider branding a product and getting engagement with the end customer as the end point. It doesn't look that different than some of these other opportunities that have made hundreds of millions, if not billions in returns. But there does need to be a kind of a shift in mindset from, let's say, the early days of clean tech to where we are today, climate tech. As long as they understand that at the end of the day, there is going to be, a longer term adoption cycle where consumers, not just in California or in, let's say, Europe, are hip to why buying sustainable makes sense. But for it to spread, across the rest of the country, as well as internationally, and that will just take time. So, put simply, we need patient capital.
I think I just want to emphasize, and a lot of investors probably already know this, but in the materials business, if there's real innovation and those specs we're talking about, they're met, it's a really good business to be in. It's highly defensible. The cash that you're raising as a startup is being put into real assets. What you're developing here is truly accruing more value, and it's very apparent. In a lot of other technologies, for example, like software, you cannot match how in the materials realm, the dynamics you have for just the reality of it. It does take a long time to develop it, which means if you continue going and doing well, as a company, you stand out a lot more. You're a lot more defensible. And at the end of the day, when you have and people are scared of building plants, but once you have one and you turn it on, that is a steady stream of income for the company. And those real assets, nobody can look at a Tesla manufacturing plant and says that thing, that's just steel in the ground. That thing's just, that's just a cash thing. There's no value to that. How can you say that, right? Manufacturing facilities in the U.S., and that's the long-term view of it. It's just a bunch of steel in the ground. But that perspective's got to change. We cannot solve the problems that we have today in climate, just in general in the world, without investing more in infrastructure. We don't have enough infrastructure. You just look at the U.S., you're asking why is adoption slow? I'm visiting the contract manufacturing facilities in the U.S., and these facilities, a lot of them are honestly not in a good state. There's not enough investment in general for this space. You're surprised why are we looking at record inflation, hard to get supply chains are delicate, is because we have not been investing in the infrastructure. And that, I think from an investor standpoint, you're looking for new opportunity. That's where the opportunity lies.
It's really hard, right? Like we're trying to solve some of the hardest problems out there. And in our case, there's the biotechnology side of it, and then there's the manufacturing side of it. So you're investing in the hard assets, and you're putting a biotechnology process into those hard assets. So you need people that can understand both sides of this. So you get some investors that are from the life sciences side, and they, for them, okay, scaling a biotechnology typically looks like this. And then you have other people that are used to scaling a non-biological industrial process, and for them, a trajectory looks like this. But for us, you have to kind of marry those two things, and you really need investors that have those different perspectives to listen to each other and work together versus, you can't fit it into a box. It's different and it's hard.
All right, Lily, Miranda, Joe, we could talk for way, way longer. I think we just scratched the surface, but we do have to wrap. Thank you all for joining us and for sharing, a bit of the harder insights. I know this is many years behind getting to where you are now. So thank you again. Good luck. And for people in the crowd, reach out, investors, corporate partners. You should talk to these three founders.
Thanks.
Right, thank you all.